MMT, here we are. We're 7 minutes into that last hourly trade. And we can see as we're approaching the last hour how we had these great breakouts and these great entries down at these bottoms. And once again, it was that teeny expansion and how the diamonds were rising in value. And now we have a short up here at the high that we're getting. And you can clearly see going into the last hourly trade right now, you can clearly see where that half bar reversal is in play, and you can see the lower diamonds, and that's on the Google. So you had a great run, and then you can clearly see the print right here. It's right up here at that high. I'd also like to bring up the MMTs in this last hour. Here's that Google breakout that we had, how exciting that was, and how exciting it took out these diamond tops. But the more exciting part was that it had reached its peak with that reversal, and then getting out of the long side with the reversal in play, right back down to this diamond support level right here in the MMT platform. It's very nice. It's very orderly. It's very price orientated to the fact. Here's that support level. Now we're going to see what happens. These were the directional late day breakouts on Google. Last hourly breakout right here on CRM, right off of the bottoms. We're going to feature what that late day we bought the lows right here and then broke out, and you can see that right there. We got the rally dogs in the background there. So that's what the CRM trade. They spent the whole day going down in the left shoulder of the trend from exhaustive overbought areas, as we told everyone. This is that late day and that last hour short cover, how to get that long short trade, but most importantly is how to ride that roller coaster higher. When the bears have to buy to cover, you get this last end of your entry here, and this is how it works on CRM. Salesforce.com is the name of the company, by the way. And Joel, you can see here, I was showing Mr. Plain how these breaking points, and when they really got down here, bam, we're updating that late day. Right now it's 12:41 p.m. 3/5/2012. Top stock Apple computer, which we had gotten shorts up at the highs, only for one reason, because the stock had to come down. It was exhausted in climactic tops, and it's gone through these topping patterns for the last couple of weeks. And you really have to know that how to take these diamond pops here when you're making a market down here at these lows and then get net short up here. This is where you get the entries down here. And they're always confirmed when the consolidation breakout happens on this first bars where you make your entry MMT, as a lot of people did. And the thing about it is you can see here the topping patterns that started to happen right in this area as you started to go to the left, and there's your confirm, boom, and here you are. So this is that late day last hourly trade at 12:42 p.m. Pacific Standard Time. Let's take a look at the half bar support levels that you have right here, and once again, the bull side of the tape is getting top heavy, and so are all of the indexes. But right now, we're covering this closing hourly bell, and right now we're in the last 15-minute bar. These are 3-minute candles, and how to short the high, how to walk that bid up, knowing when to exit, and knowing when to get net short, and what has to follow. Look at the amount of teenies. 1, 2, 3, 4, 5, 6, 7 to the teeny line. That's 7 teenies at 27 cents. So let's get out our little calculators on that trade. Is 27 times 7. That equals, once again, $1.89 in that short movement, right where that breaking point was, mastering that 3579 teeny. And that's what happened. And there's your upside. So once again, you got to know where to cover down here, because that's the directional movement. Your support levels hit right there, and bam, you bounce $1. That's how you work to close on Apple. And then you got half bar resistance. Here we are, 4 minutes to the closing bell. And once again, this was that nice price line short today in that overbought area. And in pre-market, they got it up as high as 651. They were trying to get it to go north on that opening bell. It puts in that triple top, never does look back. Gets that bottom, gets that knife hook low on that long side, buy the cover, getting that long, it comes back down, but here's another double long. So, and here's a consolidation of it. That's the recap on that one. On Priceline with 3 minutes to the closing bell, 3/5/2012, stockmarketfunding.com. For you, I'm going to come right back to you. I'm going to take that knife hook low. This is that CMG trade. Once again, 12:57 p.m., 3/5/2012, closing bell. The bull is getting weak. The bull is getting exhausted. This was an overbought stock that needed to come down. Put no shorts up in there at those highs and holding them. You can see that volatility hook on that buy to cover zone right here, getting net long at that intraday low, going into that last hourly bell, and then rolling right back over and coming right back down into trend there. MMT, and that's that CMG. How to get that directional entry and exit with a short and get paid twice. How nice. There it is. I'm going to conclude the closing bell on those last charts, but those were highlights in the last hour. Okay.